Hello everybody and welcome to the start of this life-changing 5-day course where we're going to be introducing you to the key concepts of the star trading method, which is the Bloomberg, Business Insider, Yahoo Finance featured trading methodology, which has made countless of people successful, profitable, and most importantly, safe traders. So you are in for a treat by joining us on this 5-day event, challenge, mini course, whatever it is that you want to call it. So today is all about chart mastery. So we're going to be looking at what it is the charts are telling us. What even are charts? What are they made up of? You may have absolutely zero experience when it comes to trading. Brilliant, you are in the right place. This is going to build that firm foundation for you. So number one, we're going to be looking at what are charts. Then we're going to be identifying what it is that we're looking for. So when we look at the chart, what are we wanting the chart to tell us? Because we make our decisions as traders not on what we feel, not on what we think, but on what the chart is actually telling us. We wait for the chart to tell us what direction it wants to go in, and then we follow that direction, and that is what allows us to make profit safely in the market. We're going to be looking at what candles are. So all charts are made up of these things called candles. So you may have seen these red lines, these green lines, maybe blue. You can change the colors, but generally they're red and they're green. And those give us extra bits of information which we can use to master the charts, to understand what the patterns are in the market and how we can trade those patterns, how we can understand what the market may do next based upon candles. So we're going to be looking at them. We're going to be identifying how we can master the charts using candles. Then we're going to be looking at different market indicators. So market indicators are created within the broker, so you don't have to understand all the fancy and the complex calculations that are behind there. I may have given you the example before of a duck on water paddling away furiously, but all you can see is the body moving along smoothly. Market indicators, price indicators are these types of things. So we're going to be looking at what they are and how you can use them effectively. And then we're going to be looking at the importance of patterns, making sure we're using the right patterns, we're checking them correctly, we know what we're looking for, and then taking it from there to become successful and profitable traders. So that's our agenda for today's session. So buckle up. I hope you're taking lots of notes. You've had a cup of coffee if you're watching this in the morning, maybe a Red Bull in the evening if you're there and doing this after work, whatever it is. Either way, well done for taking action and getting involved and starting to give yourself the opportunity to learn a skill set which can completely revolutionize and transform your life for the better. So that's what we're about at Star Trading, revolutionizing and empowering your life for the better. So like I said, over the week, we're going to be looking at the Star Trading methods. We looked at this a lot in the previous webinars. So we've got chart mastery, we've got risk mastery or money management, money mastery, we've got strategy mastery, we've got mindset mastery, super important. We control this and we control this. And then we've got optimization mastery. So these are what we're going to be looking at over this week. Today, we are focusing on chart mastery. So what is chart mastery? What is a chart? What are candles? I've already said this is kind of some of the stuff we're going to be looking at. And these are all the questions we need to be able to identify to know where there are buy signals, where there are sell signals. And do you remember from the very first webinar what I said about entering the market long and entering the market short? What does that make you? It makes you a bi-directional trader. So remember, we want you to become bi-directional traders that can identify sell positions and buy positions as well as the kickoff point for you making profits. So we want to do all of that. And there's a smorgasbord, what a good word, a smorgasbord of different tools and resources that you can use that are inherent in the broker, that are built into the broker, that give you these calculations which we'll talk about. So these are our market indicators. We've got MACD, we've got pivot points, we've got all these different things as well that you can use in order to become successful traders. And if we understand all of those, and there's actually hundreds upon thousands of these things that you can choose to look at if you wanted to, but my job as a mentor, my job as an educator is to keep you safe, to de-risk the process, and to make it as simple a process as possible, because then we can get you live trading far quicker, far easier, and getting you to a point of profitability far sooner as well, which is what I'm sure you want, is to become a successful trader. So that's what we're going to be focusing on over our week this week. So bi-directional trading, again, doubling your opportunity to make money. It makes you recession proof. That's the real key takeaway. Regardless of what's happening in financial markets, you can become recession proof if you know how to both buy first and sell first in order to make money. So if we look at the chart, if we look at chart anatomy, what is the market even made up of? So this is an old gold chart, so don't worry about the times or anything like that, the dates and things like that. It's not important. We're not looking for a trade right now on this chart, so it doesn't matter that it's historical. And what you can see here on the bottom is time. So this is a daily chart, so each of those red and green things, those candles, is worth a day's worth of time. And so the time you're seeing along the bottom is how much time we're currently looking at within this time span of the market that you can currently see, kind of like a snapshot. On the right hand side, what you've got there is price. So these are sometimes called pips, sometimes called points. I tend to call them points, but a pip stands for a price indicator point. So really they're the same thing. You may have heard those terms before, you may not have done. Ultimately, it comes down to what the current price is of the market. And what you're seeing when the chart is moving with these different candles is where price has been and what price has been doing, how it's been behaving, which really comes down to this little key for later on in this week, comes down to mass group psychology. I wonder if you're going to lock that in when I ask you that question in a few days' time. So that's the right hand side is price. The bottom is time. So those are our two axes. And then at the top, you've got a couple of things here. So the top right, you can see on this particular broker, this particular charting software, this is where you can actually place trades. You've got that buy button, you've got that sell button. In the middle, you can see you select there whether it's a daily chart or maybe it's going to be a different time frame like the weekly, or you might go down a time frame. You might be looking at the 4 hour, the 1 hour, or the 15 minutes. Dare I say even the 5 minutes if you're a different type of trader, but we definitely do not start at those lower levels. We start at the higher levels and then we are able to master the skill set. So this skill set that you're learning this week is all about learning to trade in less than 30 minutes a day. And I'm assuming you like the sound of that because you're probably a very busy person. You've probably got a lot going on. So you might be running a business, you might be working a full-time job, you might be looking after your family, or a combination of all of those things. And I was doing a combination of all of those things when I first started to trade, but I knew that trading was going to be the way out for me from where I was at, and I wasn't happy where I was at. I wasn't happy with my situation in life, definitely wasn't happy with my financial situation, and so I wanted to get out of that, and trading for me was the doorway because I could start with not too much capital, I could start with not a lot of time committed initially, and even down the line even less time, and so I knew for me it was going to be the doorway to more time, more money, more freedom, which is what I now get to experience and get to enjoy for the rest of my life because of that decision to learn how to trade. So there we go. And then you've got some other things on this chart as well, which are drawing tools, analysis tools, which I'm not going to go into detail on now because all of the brokers use them slightly differently. So you just have to get used to them there. So one of the key things that we really want to master and we really want to focus on, I'm going to be giving you some homework. I know it's a very negative word to a lot of people, but really I want to make sure we're testing your knowledge and testing your understanding. So support and resistance. So support and resistance is where the market has responded before. So has it been to this price level before? So remember on our right hand side axis, the price that we've been talking about, that's the price axis. Has it been to that particular price level, that particular price point? And what did it do when it got there? Did it respond? So with the image you can see on the screen right now, you've got a couple of tests. You've got 3 tests actually on that top level that I've drawn in. So price went up, it hit that price area, and it's rarely a perfect area. So don't try to look for perfection. This really isn't about perfection when it comes to support and resistance levels. So it's come up, it's hit that area, that price area, it's pulled away a little bit, moved up, hit it again, moved away for quite a long time, and then it came back up to that level, hit it again, responded, and then moved away. So support and resistance levels are areas, price areas within the market that price has responded to multiple times. So you need at least 2 clear tests of a price area to confirm a form of support or a form of resistance. The way I want you to think about them pictorially is like a ceiling and like a floor. So when you throw a tennis ball at the ceiling, it bounces off because it's being resisted from going any higher. So we call that the resistance level. So if price is going up into an area and it's constantly responding, then we call that level a resistance. I do know them. It's very easy to switch your words around when you've been doing this for a long time, but the one at the top, when price is going into it, that is called a resistance. And the one on the bottom, like a floor, again, if you throw a tennis ball down at the floor and it hits that floor, it's going to bounce off it because the floor is supported. So that's why we call those levels support. So anytime you see price consistently coming down, away, down into a price area and responding, when it goes down into it, then that is called a support. So if it's going up into it, what's it called? Yep, called a resistance. And if it's going down into it, what's it called? Yep, it's called a support. So That is what they are. So support and resistance levels. And there's different forms of support and resistance levels as well. But one of the really key things that you need to master is identifying these forms of support and resistance in the market. Because if you don't identify them, then you're going to be leaving yourself really open to making mistakes and trading in ways that you shouldn't trade. And we really do want to avoid that. And there's some really key rules that I want you to be aware of when it comes to trading live in the markets that are around these forms of support and resistance levels. So number one, never ever trade into a support or a resistance. So what I mean by that, let's say we've got our support, price is coming down like this, and say at this point here, you think you've got a trade and you're going to want to trade that short. So you're going to want to trade that down. You wouldn't do that because you've got this floor. You've got this area of support here that is already saying the market does not like going lower than that. So if you want to enter here just above it and your target is down here below it, you're forcing the market to work really, really hard to go through that level, which is already said it doesn't like doing that. Think of like an annoying child that is so stubborn and wants to get its way. The market can be a bit like that. So if it hits that level, it's going to want to bounce off it, more likely going to want to bounce off of it than go through it. So we can't enter close with a target below because we're breaking the rules of the market. We're saying the market needs to do something it's not done before or that it's proved historically it doesn't like to do. So we try to avoid that. What you might want to do is if you've got an entry here, you might want to have your target away from it. So if you put your target away from it, that's fine. We're very much okay with trading away from support and resistance. It is not okay to trade into forms of support and resistance. So make sure you do that. Rule number one that's going to keep you safe out there. Never ever trade into a form of support and resistance. Number two, like I just said, only ever trade away from them. Trade away from support and resistance. When you do that, you give yourself a lot more room for the market to move, the market to breathe, and to do its running towards your target. So give it that space. Don't make the market work too hard. Let it go in the direction it's already said it likes to go. Don't force it to go in areas that it said it doesn't like to go. And how is it saying that? How's that communicating? With the forms of support and resistance that you can see in the market. Now, I said this before, but I'm going to say it again. So you need to have at least 2 tests of a support line or a resistance line in order to consider that area a price response area. If it hits it once, so comes down, hits it, and then moves away, and then comes down again but doesn't respond and goes through, then it's not a form of support or resistance. It's been ignored. So it's just a random response in the market rather than a tested area of support and resistance. Next one, exact prices are very rare. This is why we call it an area. So price may move up to say 10,000. If it hits 10,000 and it moves away, brilliant. But it's unlikely that it will hit just 10,000. It might hit 10,001, 10,005, or 9,998. Don't look for perfection from the market. You will very rarely get that level of perfection. It does sometimes happen, which is always a bit creepy when it does, but it doesn't always happen. So we aren't necessarily looking for perfection, but we do want to have 2 clear tests of a price area. So how can you practice this? Because it does take practice. It is important that you practice this. So what we're going to be doing for you is we're going to be encouraging you to post just one picture into the Facebook group. So the Star Trading Facebook group that we have, you can get some feedback off of one of your attempts at practicing support and resistance. So the way you do that is you find a chart, use some charting software, use Yahoo Finance, whatever it is you want to do, just Google a chart, and I want you to take a screenshot, and on that screenshot I want you to have drawn forms of support and resistance, which always have to be horizontal, by the way. They can't be at an angle, they have to be horizontal. So make sure that you draw those horizontal lines, identify where you feel those multiple test areas are in the market, and then we will give you some feedback if you post it in the Facebook group. I want to give you some form of interaction because I'm a really big believer that to learn and to truly master the skill of trading, you need some form of feedback. So I want to give you at least some form of feedback over this week to make sure you are starting to apply that knowledge correctly. It's really, really important from my perspective as a mentor within Star Trading that you have that in place. You have some form of feedback. So there are multiple forms of support and resistance. So yes, go and practice that, but there are other forms of support and resistance as well. So those forms of support and resistance may look like moving averages. So you may have seen in my charts already some of those squiggly wiggly colored lines. They are moving averages. So we use a variation of them. So we use the 21, the the 8, the 50 and the 200. The 200 is often considered the institutional moving average because large institutions tend to use it as a bit of a safety net, as a place where they make decisions about whether or not they're going to buy up more stock or sell more stock. So they tend to find response areas around the 200. So that's why those moving averages are considered forms of support and resistance. Another one which you may have heard of, you may have seen, is called trend lines. Now these are straight lines like the support lines and like the resistance lines. These ones are completely straight. However, they are at an angle. So because they're at an angle, they have to track alongside a particular type of pattern in the market. And that pattern is called a trend, which we will talk about on one of the days this week. So that trending pattern can have a form of support and resistance line drawn called a trend line. Makes sense? Very easy, not too complicated, right? So if you have a trend, you can draw a trend line. It's either an upward trend or it is a downward trend. I'm not going to go into too much detail about that right now, because I will be talking about that later on in the week when we talk about the patterns that you need to be aware of to be making profit in the market. So let's talk about candle patterns, shall we? So I'm going to draw these on the whiteboard for you. Okay, so a candle will give you 4 pieces of information. So the 4 pieces of information a candle is going to give you is the high, it's going to give you the low, it's going to give you the close, and it is going to give you the open price as well. So candles are just a reflection of these 4 pieces of information, and it's these 4 pieces of information which tell us more about what the market is doing, what's been happening. So a candle is like a summary of what has happened over a given period of time. So if I draw a candle here, which I'm about to draw, and we say that this candle is worth, well, it's a daily candle. So if we say it's a daily candle, then the candle is worth 24 hours worth of data, 24 hours worth of market movement data. So hopefully that makes sense to you. So I've just drawn a candle here. What I've just drawn there is called the body of the candle. So the thick bit is called the body. Then these thin bits, which you sometimes get above and below the candle, are called wicks. So just running along with the candle theme here. So that's what they are. So this candle, I'm just going to color it in to make it easier. So if this is a green candle, then that tells us some really key information. So this price here at the top, this is called the, well, no guesses or prizes for guessing what this is rather. So that is called the high of the candle. So anybody got any ideas what this one might be? What do you think this one might be out of those 4 bits of information? Yep, that one is called the close. So actually that's not true, that's the low. So we've got the high up here, so that's the highest price that the market that you're looking at went to during this given time frame. So this is the 24-hour daily candle, so it's 1 day's worth of data. So that is the highest price it went to. This is the lowest price it went to, and because this is green, that makes this one here the close, and that makes this one here the open. So if this was reversed, as in if the high and the low can never be reversed, but if the candle open is here and the candle closes here, then that would be red, because the red means that the price for that time period ended lower than it started out at. So this candle is green because price ended higher than it started out at. So the open is here for the green one, the close is here. For a red one, the open is here and the close is here. So that is what makes a candle either red or green. So if I just delete out these arrows for you here. Now, like I said, this is very much a summary. So if you were to look at this candle on a lower time frame, then you would see multiple candles which pull together as a summary to create this one. So if we looked at, say, the 1 hour chart, that means each of those candles that you're looking at is worth 1 hour's worth of data, but they would be summarized into the daily candle. So we'd have 24 candles making up this one candle, but those candles may move slightly differently. So we know that this level here is our open. So price may have gone up a little bit, it may have gone down a little bit to match that level there. So that would be our low price. And then, and by the way, you're seeing my terrible artistic skills. My grandfather's actually an artist. It skipped me. My mother's very good, but it skipped me. So it might have moved up like this, might have moved up a bit more, hit that level at the top there to make our high price, and then come down here and stopped there and closed at the end of that 24-hour period to give us our close price. So this movement here would be made up of those, if we look in the hour chart, 24 different candles like this, moving in this sort of pattern up like this. I'm not going to draw all of them. So if you're looking at a lower time frame, you get a very different picture, a very different idea of what has been happening in that market. So we always say that it isn't over until it's over, and what we mean by over is the candle actually closing. It can all change, so you want to be very, very careful not to be making trading decisions on something like a daily candle if it's the middle of the day, because you haven't been given a full summary yet of what's happened during that time frame. So you want to make sure you're doing that. Now, a candle like this would give us a really clear indication of market bias. This is a really strong green candle, which would suggest the market is wanting to move in an upward direction. If this was a really strong red candle, then that would be suggesting that the market wants to move in a downward direction. Now, when you start to cluster groups of candles together, you get what is called candle patterns, but I'm not going to go into that just now because that will open up a whole load of other doors which will confuse rather than help your learning process at this stage. So that is candles 101, high, low, close and open. We see green candles if that closes above the open, so it closes at a higher price than it opened at. We see a red candle if the market closes at a price lower than it opened. And then we're looking at candles to tell us what direction we think the market might go in next. And that's made even easier when we have collections of set candle patterns, which we'll be looking at in later trainings. So there you have it. Okay, so we've already talked about different forms of support and resistance. We've shown you what candle patterns look like. You now understand the main bits of information that candles are giving you, and we also understand that you need to line all these different elements up if you want to understand what the market is saying. I want you to imagine that you are a crime scene investigator. Not the one causing the crime, you're just the investigator. Well, I don't know you yet personally. You may be the one causing the crime, who knows? So you are a crime scene investigator. You're from CSI Miami. Your name is Horatio. I don't know if anyone else loved that show like I used to as a kid. I was watching that show far too young, actually. Definitely shouldn't have been watching that. My parents were lapsed on that one. No wonder I got nightmares. So anyway, as a crime scene investigator, what do? You look for multiple pieces of evidence to support your theory and to find out what has happened. In the same way, as a trader, you want to read the market, understand what's going on, bring together these different elements, but be careful. You don't want to bring together too many different elements because then it becomes very confusing and it's very hard work for you to make a decision. So we want to make sure that you're picking the right evidence for the right strategy, for the right market, and you're making the right decision based off of that. Unlike a crime scene investigator, where you want to know what has happened, as a trader, you want to know what's going to happen next. Now, you can never predict. We're not in the habit of predicting, but we can get a really clear idea as to what is most likely going to happen next based upon what has happened before. So we use price pattern, we use indicators, we use candles and candle patterns, and we use forms of support and resistance as our main pieces of evidence to decide what the market is most likely going to do next. Now, when you've decided what the market is going to do next, what do you do? What's the next part of the process for you as a trader? You need to place a trade, right? So if you believe the market is going to go up in value and you want to make money, what button would you have to press? You're going to have to press the buy button. So if you press the buy button and the market goes up, then you make money, you make profit that way. So we have to press that buy button at the right time in order to make the profit in the market. But how do you press the buy button if you don't have a broker? You can't. So we need to have a broker. So let me just tell you a little bit now about brokers, because it's really, really important that you pick the broker that is going to keep you safe. Now, there's hundreds, if not thousands, of brokers out there that you can use. I want to make sure you are using a broker that is safe. And there's a few ways that we keep our traders safe when it comes to brokers. Number one is they pick a reputable broker. Number two is that it's a trusted broker that has a track record. So what you could do is you could just use the broker that we recommend, and that is FXCM. So that's the one we tend to recommend, and there's a few reasons for that. Now, we don't get a kickback or anything like that from them, not at the moment anyway. Fingers crossed in the future, maybe we will, but right now we don't. So what we do like about them though, is that they are financially regulated in multiple countries. So they're financially regulated in the UK, financially regulated in South Africa, financially regulated in the US, which means they have to handle your money correctly and they have to ring fence it, which means they have to protect it and insure it. So they can't just go away spending all of your money. It's like a bank account. Your money is in a bank account. That bank account just happens to be the broker. So we want to make sure that we're using brokers that are like that. Now, the way to find out if the broker you're using, if it's not FXCM, is registered in a financially safe country, is to go to their website. If you go to the bottom of that page, scroll all the way down to the bottom of that page, then it should give you their registered address. Now, if their registered address is not in one of these major financial control countries, then it's probably not a safe broker. So someone sent me their broker the other day that they were using. They were based in Cyprus. Bit of a red flag. Personally, I wouldn't trust that broker. I've heard too many horror stories of people having their money kept in Cyprus, kept in those brokers, and not being able to get access to it. So I personally wouldn't trust one of them. Apologies to anybody who lives in Cyprus, who works in those fields, and actually you're completely fine. If they are, speak to me, let me know, correct me, but I personally wouldn't trust that. If it's in the Seychelles, don't trust that. All of those kind of places, you get the message. It's a bit of a red flag, so avoid that. The other thing that you're going to want to do when you're first starting out is work with a broker that will allow you to trade minimums. Really, really small minimums. Why? Because as an educator, again, my job is to de-risk this process for you as much as I possibly can. So I don't want you trading with 10,000, 20,000, 30,000 in your account when you first start off, because you're probably going to make some mistakes. Like, that's very, very standard. Everybody makes mistakes. It's part of the learning process, part of the learning journey. So why not make those mistakes, make those errors on a small account where it doesn't matter quite so much, rather than a large account. And then as you're working with us, as we're mentoring you through the process and you're developing that skill set, you're developing that confidence, you're developing that consistency and that competency, then we start to increase your account balance to whatever it is that you have access to at that point. But the primary focus that you should be looking at right now is not about how much money you can get into your account. The primary focus you should be looking at is, how can I master this skill that is going to grow whatever money I put into my account into more money. I literally today had the largest profitable trade that I've ever had in my life happen. And it earned me more from one trade than my old job that I left 9 years ago would earn me in a year. That didn't happen overnight, did it? No. It took time of learning the skill, developing the skill, and building my account up, which is why I always tell people, think long term with your trading. Yes, you're going to be making money in the meantime, but getting to those really high levels of money in a really safe way is going to take a little bit of time to develop that skill set. So give yourself the time to do that. You can be trading within 1, 2, 3 months live, but to develop the skill set further, to take your account to where you want to take it to, give it a little bit of time and you'll be surprised how far you can go. So that's a little bit of a tip. When it comes to brokers, make sure you are staying safe out there. Don't put too much money into your broker. Make sure they're in a financially regulated country. Make sure that they treat your money like a bank would treat your money as well. So stay safe and do that. Hopefully that's going to keep you safe out there. So your day one action taking task, I've already mentioned it, but what I want you to do is I want you to find a financial chart. That might be Forex, it might be a stock, it might be an index or a commodity, but find a chart and take a screenshot of that chart. Once you've taken a screenshot of that chart, draw on support and resistance lines onto it. You might be able to draw them on beforehand, but just make sure they're really clear. Sometimes people put really unclear ones on. Make sure they're nice and clear and they can be seen. And then post it into the Star Trading Facebook group, letting us know if you would press the buy button or the sell button based on where the market is right now. Now, I know you're making that decision based on not a lot of education, not a lot of knowledge. That is completely fine. It's just a bit of an exercise to get you starting to think about making decisions based upon what you can see in the market. So that's the muscle I'm trying to have you exercise. Now, we're not gonna, if you put 10 in there, we're not gonna give you feedback on all of them. We don't have the time to do all of that. We've got other mentees we need to look after and students we need to teach. So we're only gonna be committing to looking at one of them. So make sure you do get that done, because I wanna make sure you're getting that feedback loop over this week to make sure you're applying the knowledge that you are learning learning correctly. So the next steps are, make sure you open up a demo account if you can do, just to start practicing some of this stuff that you're looking at. It's also going to make it a lot easier to get access to charts. Do your action taker task, like I said, and post it into the Facebook group. And set aside some time tomorrow in your diary, literally put it into your diary to make sure that you can watch the next video. So make sure you do that. Make sure you're not a stranger. Reach out to me on Facebook Messenger, reach out to me on Instagram, whatever it is, and let's connect. Hopefully you found today really, really helpful. I know the rest of the week is going to be even more valuable, even more content for you. I look forward to seeing you there. Bye-bye.